Investing can seem like a daunting task, especially when you're working with a limited budget. But what if I told you that it's possible to grow your wealth, even with the tightest of financial constraints? Today, we're going to unveil a treasure trove of strategies that will empower you to maximize your returns, no matter how small your initial investment. And trust me, you would not want to miss out on the last strategy, as it holds the key to unlocking the true power of investing. Let's embark on this transformative journey together. First things first, we need to lay the foundation for our investment journey. Strategy number one is to start with a budget. It may sound basic, but trust me, it's the cornerstone of successful investing. Take a close look at your income and expenses and identify areas where you can save a little extra. Even small amounts can add up over time, and that's where the magic happens. By being mindful of your spending habits, you'll pave the way for consistent contributions toward your investment goals. Now that we've got our budget in place, let's move on to strategy number two, automating your investments. This one's a game changer for busy folks like you. Imagine having your investments taken care of without lifting a finger. Robo-advisors and automatic transfer services make it possible. Set a fixed amount to be invested each month, and let the technology do the heavy lifting. It's the epitome of set it and forget it, ensuring you stay on track without constantly monitoring your investments. No more excuses or missed opportunities. Your wealth building plan will be on autopilot. Before we dive deeper, I want to remind you to like this video and subscribe to our channel for more valuable investment tips and strategies. We've got a wealth of knowledge to share, and you don't want to miss out on the exciting journey ahead. Next up, we have strategy number three, investing in ETFs and index funds. These babies are a budget-conscious investor's best friend. They offer diversification at a low cost, tracking entire market indices and reducing risk. Plus, they often yield solid returns over the long term, which is music to our ears. By spreading your investments across a wide range of assets, you'll be better equipped to weather market fluctuations and capitalize on growth opportunities. Now let's talk about strategy number four, taking advantage of employer matching. If your employer offers a retirement plan with matching contributions, make sure you're contributing enough to get the full match. It's essentially free money for your future self, and who doesn't love a good freebie? Failing to take advantage of this opportunity is like leaving free money on the table, so make sure you're maximizing this benefit to the fullest. Moving on to strategy number five, micro-investing apps. These nifty little apps like Acorns and Stash allow you to invest your spare change from everyday purchases. It's like investing without even noticing it, and those small amounts can grow significantly over time, thanks to the power of compounding. By making investing a seamless part of your daily life, you'll be able to effortlessly build your wealth, one penny at a time. Speaking of compounding, do you know what it is and how it can supercharge your investments? Let me explain. Compounding is a process where the earnings on your investments generate their own earnings. It's like having your money work for you, and then having that hard-earned money work even harder. Imagine investing $100 a month in a fund with an average annual return of 7%. After 10 years, you'd have contributed $12,000. But thanks to compounding, your investment could grow to over $17,000. And after 20 years, it could be worth more than $55,000. Impressive, right? Compounding is the secret that transforms small, consistent contributions into a substantial nest egg over time. All right, let's move on to strategy number six, considering low-cost mutual funds. Look for funds with low expense ratios, as these pull money from many investors to buy a diversified portfolio of stocks or bonds. This diversification reduces individual risk, giving you a more balanced and stable investment. By keeping costs low, you'll be able to maximize your returns and minimize the impact of fees on your overall growth. Next up, we have strategy number seven, dividend reinvestment plans, or DRIPs for short. These plans allow you to reinvest the dividends from your stocks directly back into additional shares, compounding your returns without any extra cost. It's like hitting two birds with one stone, earning dividends and growing your investments simultaneously. DRIPs are a powerful tool that can amplify your wealth building efforts. allowing you to capitalize on the power of compounding without lifting a finger. Strategy number 8 is all about exploring peer-to-peer lending platforms like Lending Club or Prosper. These platforms let you lend money directly to individuals or small businesses in exchange for interest payments. It's a way to diversify your investment portfolio while potentially earning higher returns. By venturing into this alternative investment avenue, you'll be able to spread your risk and tap into new sources of income, all while supporting entrepreneurs and small businesses in your community. Now, before we move on to the next strategy, let's address the elephant in the room: education. Yes, the next strategy is all about educating yourself. Take advantage of free online resources, courses, and communities to deepen your understanding of investing. The more you know, the better decisions you can make, maximizing your returns and minimizing risks. Knowledge is power, and by continuously expanding your investment expertise, you'll be able to navigate the market with confidence and make informed choices that align with your goals. Now the one you've been waiting for, the secret that ties it all together: stay consistent and patient. This might seem simple, but it's one of the most powerful principles in investing, especially when you're on a budget. Consistency is key when it comes to investing. By contributing regularly, even in small amounts, you'll benefit from the power of compounding. Remember, compounding is like a snowball effect. The longer you invest, the more it works in your favor. Consistency also helps you navigate market volatility by buying more shares when prices are low and fewer when prices are high, averaging out your cost per share over time. It's a disciplined approach that removes the guesswork and emotional decision-making that can often derail investment strategies. But consistency alone isn't enough. Patience is equally crucial. Investing is a long-term game, and markets can be unpredictable in the short term. Staying patient and maintaining your long-term perspective will help you ride out the downturns and benefit from the subsequent recoveries. It's easy to panic during a market dip and sell off your investments, locking in losses. But a patient investor stays the course, holds on to their investments, and benefits when the market rebounds. Patience is the antidote to impulsive behavior, allowing your investments to weather the storms and capitalize on long-term growth opportunities. Combining consistency and patience is the secret to successful investing. Regular, disciplined investing builds your wealth over time through the power of compounding, while staying patient helps you weather market volatility and avoid rash decisions. Remember, investing is not about quick wins. It's about steady, long-term growth. So, embrace the journey, stay consistent with your contributions, and be patient. Your future self will thank you for laying the foundation for financial security and freedom. Now, it's your turn to take action. Like this video, drop a comment with your own investment experiences or questions, subscribe to our channel, and hit that notification bell to never miss another valuable tip. Together, we can navigate the world of investing and achieve financial freedom, one step at a time. Until next time, keep investing wisely and building the life you deserve.